Just wait for 2025, they said. Inventory will flood the market. Well, it's 2025. And instead of a flood, the market is drying up fast. New listings, those are actually crashing. Want proof? San Francisco, new listings of homes for sale now down 30%. Yeah, that's right. I said 30% year over year. Austin, Texas, and that was the crash city, right? Down 14% in new listings of homes for sale. You want more? I've got Nashville, Tennessee, big crash city, right? New listings of homes for sale down 13% year over year. New York City down 6% year over year. So, folks, it's a strange market. We have sellers, they're pulling their homes off the market, as well as refusing to list their homes. Delistings of homes on the market right now is growing faster than active inventory is growing. So, is this a sign that sellers are in distress and the housing market is going to plummet 50, 60, 70, 80, 90, 100% like some folks want? Or is it just the fact that sellers are refusing to play ball? Well, to give you an idea of what occurred during the great financial crisis, we saw nearly 400,000 homes listed weekly during the GFC. So anywhere from 250 to 400,000 homes at the peak of the debacle during the GFC were put on the market for sale. Right now, we have a meager 93,000 homes being listed, with upwards of 4 to 5% of those homes on the market being pulled by the sellers. So it's not exactly the crash that a lot of people wanted, but it is a crash. I mean, if you're looking for a crash, this is it. I mean, new listings are unfortunately falling. And so something's definitely broken. And let me show you what this data actually says today. Welcome to The Housing Nerd. My name is Jason Ferrier. I am a realtor and investor. I've been doing it now for about 7.5, 8 years or so in Central Ohio. And I'm not going to sit here and tell you that the housing market is going to plummet from a price standpoint next week and that you should definitely wait to buy a home. I'm also not going to tell you should run out and buy a home, because it's your decision. I'm going to give you the data today based on the Redfin update so that you are more informed about the housing market and you can make the right decision, because it's your money, it's your life. I don't know your specific situation. So let's get started with this information right here. So these are new listings of homes for sale in San Francisco. I mean, I almost fell off my chair when I saw this. Down 30%. 30%. So it's hard to have a housing market crash when you have inventory not really being added to the market. I mean, you need more inventory than last year, right? I mean, weren't you told that more people would be listing their homes right now, that sellers are in distress, and that there's going to be a fire sale of Airbnb owners, investors, institutional investors? I mean, I've got more here. Look at this. Nashville, Tennessee. This is the Airbnb capital of the world, right? A lot of these areas were supposed to do away with Airbnb, right? And so all these Airbnb owners were going to have to flood the market with inventory. And so that price crash is just around the corner. If you get one thing out of today's video and our live today, please, I'm just begging you to realize that new listings are like the first thing you can look at in the housing market to understand what's really happening with your local market. Right? I mean, if new listings continue to rise at a rapid rate, like 400,000, like we saw during the GFC, time for concern. But when new listings are down year over year, fewer sellers are putting their homes on the market, makes me think, I guess they don't need to sell. They just maybe want to sell, but they don't need to sell. And you need people that need to sell in order to crash the housing market. You just do. Tell me if I'm wrong. Maybe I'm wrong. But I can't see how you can have a housing market crash without inventory. So that's Nashville. Let's look at another one here. Austin, Texas, down 14% in new listings. New York City, down 6% in new listings. Even Las Vegas has joined the party, down 4.4% in new listings. Now, people will say, well, that's because there was July 4th. But like, there's July 4th every year. I'm not talking like week over week. I'm talking year over year. So let's look at another one. San Diego, California, down 6%. Denver, Colorado even joined the mix, down 4.7%. I've got more. This is like something that's becoming kind of old hat now with these new listings. Boise, Idaho, down 2.8. Redfin kicked me out, but down 2.8% for Boise, Idaho. Even Cincinnati, the nasty natty here in Ohio, we've been growing inventory, but now Cincinnati down 1.2% year over year in new listings. I've got Riverside County, California, down 14% in new listings year over year. Riverside was like the mecca of the housing market crash last time. Why? Tons of inventory. I'll keep going. Show you a couple more here. Los Angeles County, California, down 11% in new listings. Dallas County, Texas, down 9% in new listings. This isn't just the metro with these counties. These last few slides I've showed you, these are actually, these are counties. So it's like the metro and the surrounding area. Down 9% in new listings. It is what it is. I'm not going to sugarcoat this. I'm not going to tell you that, hey, just wait another week because then, everything will be okay. It's like, man, these new listings are not good. And there's nobody talking about this. That's what I can't figure out. Like, no one's talking about this fact. They're just like, meh, inventory's growing. It's like, well, it may be growing in a lot of areas, but new listings aren't doing well. And that's going to hurt active listings as we move into the fall, at least in my opinion. TH2, good morning to you. And good morning to all the nerds out there. All right, so we're going to look at the national picture first, as we always do. Then we're going to jump into the metros that you guys have requested. I got a lot of them already loaded for you, so we can go through this quicker. And it's your chance to interact about the housing market. Tell me I'm wrong. Tell me, take out your anger out on me. Tell me, nerd, what are you talking about with these new listings? And here's the thing. People don't want to hear this. Like, they do not want to hear that new listings are falling. They want to hear that sellers are in distress. But I'm not going to tell you that because that's not what I'm seeing. When we start seeing new sellers that are in distress, we'll know it from new listings, and I'll be right here covering it with you. And take you through all of it. But you don't need people telling you what you want to hear. You need information that helps you. All right. By the way, if you join the live, please hit the like button. It'll get more people involved in the conversation. And that's the only fee I charge for these live videos is your thumb. So just thumb up. Thank you. All right. Good news for home buyers. Sellers start pricing lower. Monthly mortgage payments dip to a 4-month low. Buyers are also checked out of the housing market for the most part right now, though there are places that are selling homes. But overall, buyers and sellers are checked out still. I mean, just think if buyers came back, just like if sellers came back in a strong way, you'd see a lot of inventory. If buyers come back into the housing market for some reason, which right now they're not, then you'd have a major inventory crisis again. The median U.S. asking price posted its smallest increase since the start of 2025, as more sellers come to terms with the reality of today's buyer's market. That's good. We need prices lower. We need the expectations lower of sellers to be realistic. But if people are pulling their home off the market, it means they didn't need to sell. They just wanted to sell. The median U.S. asking price was $407,000 during the 4 weeks ending July 13th, up 2.9% year over year. The smallest increase in over 4 months. That's just slightly higher than the median home sale price of $401,120. The small size of that gap is a sign that sellers are starting to price their homes lower as they realize it's a buyer's market. The median sale price is up just 1.7% year over year, given that the average U.S. wage, ready for this, has increased more than 4%. So right now they're saying wages are outpacing home price growth. Tell me if that's true. Is that true? Comment in below in the comments. Tell me. Obviously, you're going to comment in the comments. Where's you going to comment? Tell me, do you think wages are rising 4% and home, do you think wages are increasing more than home prices? Homes are more affordable than they were last year. Are they? Are they more affordable in your market? Comment and tell me. I don't see them being more affordable. I mean, home prices are still ridiculously high. There's been some drops here and there, right, in certain markets. But any type of price crash, that's like a fantasy at this point. The housing market has been tilting in buyers' favors for months, with buyers getting concessions from sellers and often successfully negotiating sale prices down. The slowdown in asking price growth, along with the shrinking gap between the prices sellers want for their homes and the prices buyers are willing to pay, is a sign that sellers are coming to terms with the reality of today's buyer's market. Another sign that homeowners have caught on to today's market conditions. Listings are losing steam. New listings are down nearly 1% year over year, the biggest decline since the start of 2025. Still, there are hundreds of thousands of more sellers than buyers in the U.S. The total number of homes for sale is up 12%, while pending sales are down 2%. So fewer people are buying homes right now than last year, as far as pending sales go. But the total number of homes for sale is up 12%. I mean, it's really not that much. It's kind of crazy to think about, but I was expecting the total number of homes for sale year over year right now to be up like 30, 40%. I think a lot of y'all did too, right? I think a lot of pundits on YouTube thought that too. I mean, if you read the headlines right now in the mainstream media and even from a lot of slow YouTubers, they're like, oh, inventory's exploded in the U.S. Prepare for demise. It's like, well, look at the data, man. See what's going on. Sale prices are still at record high but they may decline soon. Redfin forecasts that the median U.S. home sale price will fall 1% year over year by the end of 2025. And homebuyers' median monthly housing payment is coming down, dropping to a 4-month low this week as the weekly average mortgage rate sits near its lowest level since early spring. The combination of a buyer's market and falling mortgage payment is encouraging some buyers to return to the market. Home tours are rising much faster this year than the same period last year, and Google searches for homes are at their highest level in over a year. Buyers should look at a lot of homes and make a lot of offers, even if they're low or below market value, as more and more sellers are willing to make a deal, said Jim Fletcher, a Redfin premier agent in Tampa, Florida. We'll look at Tampa in a minute. There's a backlog of inventory, especially when it comes to condos. That's a good point to look at. Townhouses and newly built homes. Builders are giving all sorts of incentives like mortgage rate buydowns, covering closing costs to get their homes off their books. The one exception, desirable. Pay attention to this. Desirable move-in ready homes in the center of town where there aren't as many new construction homes to compete with. Buyers will usually pick those up relatively quickly if they're priced right. But if you look at this part here, is kind of interesting about condos. If you separate, and I can't do this nationally on the weekly data, they don't allow you to slice it like this. But if you look at condos compared to single family homes, condos is a lot of the growth. So again, you got to look at like the details behind the data. Like, why are there a lot more homes on the market? Like, where's that inventory made up? Well, if the inventory is in beat up homes, homes people don't want, homes that are luxury homes, overpriced, and condos, well, are those single family houses that are move-in ready in decent areas and priced correctly? No, they're not. Those homes are still moving fast, by the way, because I sell them. I help people sell them as a realtor. Those things move. Expensive homes, they may sit. Overpriced homes will definitely sit. But that's good. You need that, right? All right, let's do some mortgage update for this week. Daily average 30-year fixed mortgage rate, 6.83%, up from 6.67% 2 weeks earlier, unchanged year over year. So mortgage rates haven't come down really, right? They really haven't. This was as of a couple days ago, but let me look at Mortgage News Daily. Let's find out where that is. And don't worry, I'll get to some comments in a minute if there are any. If they're not, that's okay too. Makes this thing go quicker. Like one of the things I've been looking at, so right now, 6.82%. I've been looking at that 30-year mortgage rate compared to the 10-year spread. I'm sorry, the 10-year treasury. And the spread between the 10-year treasury and that 30-year mortgage rate has been shrinking, almost like lenders are becoming more confident about the market. So mortgage rates, to me, it looks like they're starting to come down slightly, even though the 10-year treasury, especially over the past few days, hasn't been coming down that much. Like if you're hoping for a crash, and you can't control any of this, by the way. You can't control any of this information. But if you're sitting around hoping for a real estate crash, whether you want to buy or not, or you're just hoping for doom, most people are just hoping for doom. They're not going to do anything if a crash actually happens, in my opinion. Tell me if I'm wrong. But you got to have rates high. And they're starting to come down. Will they come down into the low sixes or underneath 6? Heaven forbid. Let's hope not, just for the health of the housing market. But they may. Nobody knows. If they do come down under 6%, that's not going to be good for inventory. At this point, it's just not going to be good. It'll be good for realtors because there'll be more transactions, people buying and selling, but not good for people trying to compete to buy a home, probably. And that's a shame. But I mean, it's very possible that we missed our window, that the window happened, right? That the window of decline. I mean, 2022, a lot of markets peaked. So maybe that was the decline we saw. Let me know what you think. All right. So let's look at mortgage purchase applications. Back to mortgage updates. Down 12% from a week earlier. Up 13% year over year. So people are applying for mortgages more than they were this time last year. Strange, but true. Nutty. Touring activity up 14% from the start of the year. At this time last year, it was up 4% from the start of the year. So I guess more people were touring homes. And Google searches for homes for sale, highest level in nearly 2 years, up 9% year over year. So people are typing in home for sale more than they were last year. Anyway, at this point, it hasn't translated into pending sales. So here are the national metrics that we look at on the top 400 metros. Median sale price, look at that, 401, 120. It hasn't come down over, since last year. Like it's not down year over year. It continues to go up. So will it actually fall underneath 2024? I don't know. May not. Median asking price, they mentioned this in the article, 407, smallest increase in 5 months. So the amount people are asking for homes is coming down. Is that because sellers are becoming more realistic or because they're taking their homes off the market? Median monthly mortgage payment, $26.99. Lowest level in 4 months. Pending sales, 81,906, down 1.9%. Yeah, pending sales, not good. And look at new listings, 93,000. Remember, this 93,000 number was 250 to 400,000 during the GFC. So it's difficult to have, again, a crash, housing price crash, when new listings are kind of just meandering along, right? They're not exploding. And this is where you'll see the pain in, like, this is where you would see the pain in the economy transfer to the housing market. You want to know what's happening in your housing market? Watch new listings. You could literally get on Zillow, and there's no exaggeration. You could get on Zillow right now, look at new listings. First off, look at all the homes for sale in the area you want to buy in. Like, not the whole city, but the area you want to buy in. Look at how many homes are for sale. Write that number down. Now, come back tomorrow and look at how many homes are for sale. And look at the change and look at how many new listings are on the market. And write that number down. Then do that every single day. Take 10 minutes every day and do that. Every morning, wake up with your coffee, do that exercise, and watch what happens to new listings and inventory. If you see new listings skyrocket, if you see inventory start to build quickly, especially when the nation is going down in new listings and active listings aren't growing that much, then if your area is growing, that's a key. You may see some price softening coming up or price decline. If you don't see that, you're not going to have a housing crash in your area. You can't. You got to have more new listings, more active listings. Look at active listings. 1,171,000. This is pathetic. Only up 12%. Smallest increase since March of 2024. So the difference between last year and this year's active listings, the percentage difference is shrinking. You'll see that in a minute. Like this 11.9%, that number is shrinking, not growing. Months of supply, 4.1. Up 0.5 points. So last year it was like 3.6. Now it's 4.1. Why has this grown, but new listings aren't growing that much, and active listings aren't growing as much as a lot of people want them to? It's because there's properties that are sitting there on the market that sellers don't need to sell, so they're just leaving them on the market to rot. That's what I think happens. Share of homes off the market 2 weeks or less, 34%, down from 38%. So 34% of homes are moving within 2 weeks off the market. Whether they sell or delist it, I don't know. Median days on market, how long homes are actually sitting on the market before they go into contract, 38. That's up 5 days. Not that much. Last year, 33 days. This year, 38. It's not like it's 60. Share of homes sold above list price, 27.9. So there's still over a quarter of homes are sold above list price, final list price. Average sale to list price ratio, 99%. So sellers are getting about what they're asking, minus 1%. Here are the biggest winners and losers in the housing market right now as far as metros, where median sale price increasing the most: Cleveland, Newark, New Jersey, Detroit, Nassau County, New York, and Cincinnati, Ohio. Ohio's unhinged with prices, folks. Like, we're at record highs. Like, there is no stopping home prices right now in Ohio. And if they are reversed, if the trend reverses, you're going to need like cataclysmic economic distress and pain to cause prices to materially come down in Ohio. I mean, they're so high right now that, like, they're beyond description how high they are. Every metro in Ohio is at record prices almost, virtually, or tied right now. Oakland, West Palm Beach, Tampa, Atlanta, Austin. These are all down the most in prices year over year. And prices declined in 12 metros. This isn't growing. Last week, I think it was 12. The week before that, I think maybe it was 11. So it's growing by 1, I guess. But that means there's 38 metros of the top 50 metros where prices went up year over year, not down, up. Again, I'm just trying to give you the facts. Even if you don't want to hear them, and you may not want to. I understand that. If you're like, shut up, nerd. I had people on my channel last week comment and say on my Redfin update, tell me that new listings don't matter. That's not a very good data point to look at. I'm like, well, what would you look at then for seller distress? You can't just look at prices. Pending sales. Where pending sales are, oops, let me do, oh, they didn't put new listings on here. Look at that. Huh, interesting. Pending sales, where they are growing the most. Virginia Beach, Phoenix, Warren, Michigan, Montgomery County, and Milwaukee. So there are a lot of areas where buyers are more active. Miami, Tampa, Las Vegas, and Orlando, all down the most in pending sales. And some of these areas are down with new listings too. Like sellers and buyers are like, nah, I'm going to check out. I'm not going to participate. Okay, let's get into some comments. Then I'll look at the metros. I'll start going into the metros. What do we got? Comment time. Comments for a few minutes. Well, I'll check back when sellers are in distress because I'm ready to buy, but not paying these outrageous selling prices at all, period, especially when many homes have issues. Ann Scott, thanks for checking in, Ann. That's fine. I mean, you can wait as long as you want to. I mean, that's the cool thing about real estate. Everybody has their own strategy and their own ideas. Patience is good to have in real estate. So be patient. But I don't know where you're located, Ann, but don't have a false sense of, don't lie to yourself, right? That's what I don't want you doing. I don't care if only 2 people watch this live. I did lives for a long time when no one watched it. So it ain't no big deal. And I don't care if you buy a house or not. Not going to affect my life. But for goodness sakes, don't lie to yourself. I'm not saying Ann is, but if you're out there and you're like, I'm just going to wait another week until prices fall. It's like, well, look at the indicators in your market and then make that determination. That's what I do. That's what the pros do. Too high. Prices? Yeah, they are. Well, for a lot of people, they're way too high. People are still buying, though. Unreal. Could you look at Fairfield County, Ohio? Yes, I certainly could. Are you in Fairfield County? You must be. Nobody's just going to ask about that without living there. Yeah, sure. I could take a look at that. Stuntfish. How are you doing? You are over the target. Good morning. You are over the target. I don't know what that means. I guess that's good. Good morning to you. Market text. It wouldn't be worth it to sell my house in Metro Cleveland, locked in by my low interest rate. Yep. And that's why, right? That's why a lot of these sellers are not moving. There's a lot of people that want, pray, hope, dream that sellers are in massive distress. They look at and I'm not telling you it can't happen. Like student loans could be a problem. Obviously, all the mortgage forbearances are ending soon, supposedly. So things could change. But a lot of the folks are like market techs here. They have a low rate. I just had my 30-year high school reunion. Now I'm telling you my age. I just had my 30-year high school reunion and talked to a couple old classmates. And obviously the real estate market came up, right? I can't help but talk about it because I'm in real estate and I'm a nerd, but I'm sure it annoyed the heck out of them. But they all, several of them admitted, and they live in the town I live in now. They were like, I'm not going to sell, Jay. There's no way I'm going to sell. Why? Because I've got a sub 3 rate or sub 4 rate. That would be crazy to sell. I think they're going back to their bank to ask them to extend the mortgage, make it longer for me so I can pay this low rate for longer. So just like you, market techs, no reason to sell. And that's what I think drives people nuts. It drives a lot of probably people on my channel nuts that, oh man, I really want interest rates, or I really want sellers to be in distress. I want them to be hurt. I don't like it that they don't have to sell, but that's what we're seeing. Question about new listings. Is it possibly big builders are not listing homes in the MLS to get around some of the MLS posting rules? Well, there's no rule about, there are rules about posting on the MLS, like things you can and can't do, but there's no law that says you have to post your house on the MLS. If I'm a builder, I don't have to post it on the MLS. There's a new build right next door to me where I live, and they're old houses, but there's a lot that was open and a new builder came in and it's not on the MLS. It's not on Zillow. So you don't have to list it on the MLS. There's no rule about that. Whatever builders are doing now, they've always done that. So when you compare data missing some new builds to data missing some new builds, it's like, to me, it's still data. And existing homes dominate the market anyway, overall. So to answer your question, I think the new listing data is important to look at. Is it exact? Probably not, but it's important. And builders don't have to put their homes on there. There's no law that says that at all. Some people think that. I'm not saying you do, Stuntfish, but some people do think that. Why are houses on Zillow still appreciating in areas where there is a prediction of price decline? Because, well, if it's a Zillow, by the way, Ko-Fi Studio, welcome. Thanks for joining us. If you mean Zestimate, their estimate, or do you mean like a recently sold property? If you mean the Zestimate, they're just using the Zillow Value Home Index to measure that home's value, and it's supposed to be based on comparable sales in the area. So it means that homes in the area are selling for more than they did last year. That's what it means on the surface. So like Reventure Consulting, for instance, uses Zillow data. Many people don't know that, but he does use Zillow data, and a lot of people don't like Zillow data, but that's what Reventure Consulting uses on his app. And I think that's could be taken with a grain of salt. The best way to look at the value of a property is by comparables. So just pull 3 comparables in the area, in the subdivision or in the neighborhood, and look at the averages. That's a simple way to do it. Make sure they're comparable, though. Don't like price a 5,000 square foot home against a 2,000 square foot home. And the other reason that it's prediction of prices, because that's a prediction, but maybe not reality. Check Fresno, CA. I'm going to see a home today. I'm going to offer low. Good for you. Over the weekend, went to 2 showings. Viewings is the bad one, with really low list price, and both were jam-packed with foot traffic. Exactly. The notion that like these homes are sitting on the market that are priced lower than market pricing or good homes. I mean, even in Fresno, where a lot of people were like, oh, the market's going to crash there, just like last time. I mean, people obviously still want to buy homes if Juan Z is telling the truth, which I think he is probably. Yep, I'll look at Fresno. Scott, a lot of houses are not only expensive, but as mentioned, dollars of additional work needs done. Overall value isn't there. I agree. I just looked at like 3 deals this week of homes that they were from wholesalers who sell homes through, they're selling the contract. They're not actually selling the home. And I've bought houses from wholesalers before, and they were all like in small Ohio towns, priced at $100,000. They need $120,000 in work. And I could probably sell it or flip it for like $220,000. That math don't work. Not even close. To rent it, I could maybe get $1,300 a month. That math definitely doesn't work. But they were scooped up at $100,000. And we're talking built 1910, needs a roof, foundation, windows, heating system, electric, plumbing, everything but the frame of the house. So I agree. You got to hunt hard. But deals are out there. You just got to look hard. Yep. Little inventory makes for little to no movement. Exactly. Marco, how you doing? Good morning, housing nerd. Good morning to you. Can you check out Williamson County, Texas? Yes, sir. I'll tag that one. Rebecca, means you're speaking out and it's all about the money being collected in Ohio. Means you are speaking out and it's all about the money being collected in Ohio. Oh, you mean taxes? Yeah. A lot of tax talk right now. But thanks, Rebecca. Oh, and one of the homes went into pending in 3 days. And my agent told me they had an offer at $470 and the list price was $435. Holy cow. This ain't going to help us in terms of price pressure. Exactly. Man, you need to go. You should probably take a picture of the home, put the address on there, send that to Melody Wright on Twitter, on X, whatever. See what she thinks of that. I'd like to know what she thinks about new listings in Nashville, in her home state, being down. Oh, no. Maybe an uncomfortable conversation. All right, let's get to some of these cities. So somebody requested, let me go back up here. Let me do what folks on here requested first, and then I'll get to some of the ones people requested during the week. All right, so this is the data center. You guys know the drill here. So nationally, new listings are down. Let me just do this. There we go. That's better. So new listings are down in all metros, down 0.3%. I mean, it's not down 30% like San Francisco. But again, like, look at 2022 with new listings. Look at that. 122,000 in 2022. Could it be that we already saw our peak of inventory? We may have seen our peak of inventory already this year. Like from now on out through the rest of the year, we may see inventory fall. I mean, and if you're waiting for like inventory to explode, you may have to wait till next spring. Crazy. Let's look at these areas, though, you want to look at. Fairfield County is first. Let me just jump onto this. Fairfield County, here we go. Fairfield County, folks, is in central Ohio. By the way, I do an all Ohio channel now. I have it's called the Ohio Housing Nerd. Check that out if you want to know more about Ohio. And I'll do a live where I cover just Ohio areas. I may not get to it today. It may be tomorrow, even Sunday. But I'll do my best to get to it today. So new listings in Fairfield County, Ohio. Look at this, up 18.7. So not all areas of the U.S. have lower new listings. Fairfield County's big too. Like it goes from Lancaster all the way up into like the Reynoldsburg area. And Pickerington, I think. But yeah, new listings, I mean, those have been growing substantially. That's good news if you're looking for a home there. Active inventory, what's that doing? Look at this, up 16.59% in Fairfield County. And here's the other thing I look at. Look at the rate of change here. This shows you how fast it's going up year over year or how fast it's going down. Right now, it's going up at a pretty good clip. So that's good. You need more active listings. Let's look at homes sold. Homes sold up 2.2% year over year. So people are buying homes. They're definitely listing homes. It's good news. Let's look at median sale price. Median sale price in Fairfield County, $358,000. Not an all-time high, but higher than last year, up 4%, call it 5% from last year. So the median sale price hasn't crashed yet. Obviously, not coming down. Let's look at the rate of change. Look at the rate of change right now. And that's showing us the year-over-year increase. I mean, at first you were at 7.45, 9%. Then it dropped all the way down to -10. But now it's kind of gone up. So the spread between last year and this year with median sale prices increasing, that's probably not what you want to see. Although I will say, if you're in Fairfield County and looking for a property in Fairfield, I mean, there are a lot more homes for sale right now, and that number is increasing. Like 536 last year at this time. What'd you have? 460 in a county like Fairfield? That's not bad. You need to see more of that in order to have some price discovery. And if you're one of the folks that have requested a metro, tell me what you're doing in the metro. Like, are you looking for an investment property? Are you looking for your first house? Not, just because I like to have some context around it. Like, and what price point are you shopping in? You don't have to tell us if you don't want to, but the more info, the better. Just to kind of put some context around the market. Okay, that was Fairfield County. What's next? Hope that helped. Fresno. So this one's interesting, and I think, Juan, you gave some really good data there with the house that you went to see. I just want to go back to that real quick. You said it right here. Oh, yeah. One of the homes in Fresno went pending in 3 days. And my agent told me they had an offer at $470. And list price was $435. And you said there was it was crowded, the open house. I'm seeing the same thing on houses that are, priced right. And oddly enough, if you price a home low, sometimes you can actually get more than you would if you started high. Maybe that's what they did. Was that a good price? I'd love to know, Juan. Like, it's $435, where you're like, man, that's a good price on that home. Or you're like, meh, that's okay. Like, let me ask you this. Would you have paid $435 for it? That's what I really want to know. New listings in Fresno, California, down 9.7%. And look at this. They're down big time, right? Right now, 9.7%. They've been falling for a couple weeks now. And that trend could reverse because it was going up. And now it's down in the last 2 weeks. So maybe it is just the July 4th holiday for these guys in Fresno. We'll have to wait and see. But look at active inventory, how it sharply started to fall. So you have fewer homes on the market versus versus last week. Last week when we looked, you had 1970. Now you've got 1930. I wonder about homes sold. I mean, homes sold down 10%. So either, let's see. That's 130. So you had 130 homes sell, you had 154 homes go on the market. What we don't know is how many homes were delisted. Redfin took that data away from us. The delisted info I have is from Realtor.com, but I don't have it by market. But Redfin took the data away from me. They also took price drops away from me. Maybe they didn't like the way I was using it. I don't know. But you're not, if you look at that spread, that's only 24 homes, 154 added, 130 sold. So you've got 24 homes that basically were added to the market. It's not that many. Look at the number of homes sold, though. The percentage is down. It's up really low right now, 10%, down 10%. So if this buyer demand pulls up at all, it's going to be even worse for prices. Let's look at median sale price, by the way. Yeah, look at this. Juan's right. Look at Fresno. 435, an all-time high, right? Yeah, 428 back last year. Oh, no, it's not an all-time high. My bad. 441 earlier this year was the all-time high. Not much better. Now 435. But you're up 4.6% year over year. It's funny that the median price is 435 and the home that you looked at was 435. That doesn't happen very often. Fascinating. For me, it is. Again, that's why I call myself a housing nerd, because other people are like, that's fascinating. I think it is. Just the market dynamics are fascinating for me. Yeah, I'm going to scroll down here and see if one replies. Oh, you gave me the address. Look at that. 1750 East. How do you say that? DeYoung. 1750. I'm going to look at that. I'm going to look that up right now. 1750 East DeYoung. DeYoung. All right, here's the house that Juan looked at. Pending, you're right. Yeah, it looks like a nice home. Looks like a nice California home. I mean, it's, how big is it? Let me go back. 1,465 square feet. Those are in Ohio. Look at that. If you're in an affordable market like I'm in, affordable is relative, obviously. But for people in Fresno, my market's affordable. 438, and you get 1,400 square feet. Jeez. On Redfin for 5 days and went pending. Built in 1992. Let's just take a peek at it real quick. Yeah, it looks like a nice home. Looks updated. It's a pretty home. I mean, I'm not going to lie. I wonder if this was a flip. It doesn't look like it unless that's virtually staged. It's got a pool. Got to have a pool. Look at that shower. That's a cool shower. Yeah, look at that. Nice pool. Cool little outdoor living area. Yeah, that's a pretty house, man. So is this a house that you would, like I asked before, is this a house that you would you pay $435 for it? Maybe you answered me. I have at it. Sorry, listed at 438, but 470, that's crazy for the size of the home, but don't get me wrong, it's move-in ready, nice pool and all. I'm curious. Yeah, Juan, let me know and I'll move on to somebody else, but thanks for sharing the address. That was really nice because it helps us understand what's really happening. Is this a home you would pay 435 for or 438? And let me know, would you pay over asking for it, but not 470? I don't know. I'm not there. But it does look like a nice move-in ready home. Man. That's something. Cool little exercise there for us. All right, back to the data. So yeah, median sale price 435. I believe it. I do. Based on what we just saw. And the other thing I'd love to know, Juan, because you're out there looking, are you seeing a lot of these type of homes, move-in ready homes on the market? Or are they like scarce in this price point? Okay, let's get to the next one. There was someone else who wanted one. Marco, good morning. Can you check out Williamson County, Texas? Yes. Let's look at Williamson County. I don't even know where that is. Williamson County, Texas. New listings. Whoa, median prices there just down big time there. Let's look at, I'm just curious. I'm looking at a map. I just want to know where it's located. Oh, north of Austin. Okay. Thank you for suggesting this. This will help. New listings in Williamson County, Texas. Oh my goodness. Down 20%. New listings down 20%. The other thing is, a lot of people ask, are investors buying homes? Shockingly, around 20% approximately of homes sold right now are going to investors. Personally, I mean, maybe they're fixer-uppers and they're just negotiating prices better than I can, but I can't understand how they're making the numbers work unless they're just dumping cash into them and letting them sit there with a renter, even if they're, even if they need work, they're putting the work into them. But they obviously don't need to sell the homes. Otherwise, they would they would sell them, right? And they did, so it's like if they need to sell them, a company's going to sell them. And weren't institutional buyers supposed to be net sellers this year? I don't know. New listings though in Williamson County, north of Austin, down 20%. Got to think there's a lot of new homes there. So maybe it's shadow inventory, right? You can always blame shadow inventory. Soon we'll talk about a shadow Fed chairman. Always shadows. Active listings down 13%. No, I'm sorry, up 13%. My bad. Sorry. Up 13%, but it's headed down now. So number of homes for sales headed down. You're losing inventory right now. What about homes sold? Look at homes sold, way down 17%. So you had 189 homes sold. How many new listings did you have? 235. So you added like what, 45, 46 listings. Not that many, I guess. People aren't buying and they're not selling there. They're just like, nope, no thanks. It makes sense because 85% of buyers, or I'm sorry, of sellers are buyers, meaning they're also somebody selling a house also buys one. So it would make sense if people aren't selling, they're not going to buy the next one. Usually, right? Let's look at median sale price. Look at this. Hey, look, a price crash. If you're waiting for a price crash, you could look at Williamson County, Texas. Is that a price crash? Down 4%, but look at the peak. Right now, you are at 416. The peak, 522. I mean, that's down over $100,000. That's like 20% approximately, right? Is my math right? That would be a crash, right? A lot of people say 20% decline's a crash. Marco, tell us what you're doing there. Are you looking for a house? Or are you just asking? It's okay if you're just asking. You don't have to be buying a house. But I'm just curious. Man. Yeah, prices there haven't really done much this year. Well, you were started at 430, now 416. 430. I mean, up and down, but look at the rate of change too. Like the rate of change is sideways, meaning the year over year, the price isn't really changing. It's just kind of going sideways. But look at it. Here's the point. Look at in 2022, what happened to prices. You were up at one point in Williamson County, Texas, back in 2022. You were up 43%, 44%. Does it matter when you're at that price? And then that rate of change just fell off the map because when you look up here, you can see how prices at 422, or I'm sorry, in 2022 were 522 and fell and fell and fell. And they ended the year at 439. Now, that same point, let's go back and look at new listings. Look at that. New listings in 2022. Look how they went up. They started at 150 a week in new listings. Not many at all. Then peaked at 460 new listings in a week. That's a lot. Now let's look at inventory. Let's see what happened in 2022. Yeah, look at this. I mean, look at the difference, though, in the chart. The blue, this is us now. This is 2022. And look how 2022 started low and just skyrocketed upwards. I mean, you had, 1,200 homes on the market at one point? That was like a low number. And then you went to 4,250. Wow. 1,200 to 4,250, 3,000 homes were added during the season. That causes like a market shock, where people were like, whoa, what is going on? I got to think that's what happens. And then you saw prices fall substantially because of it. Now we started the year at 3284, right? That was kind of let's see, the low point was, low point was 3150. Now 4600. So 1500 more homes, but not 3000 in like a matter of weeks. And then you can see what happened to prices, right? Prices just went whoop down in 2022. So that's what you need to see in your market. You need to see new listings just go woo straight up in the air in 2022, or like they did in 2022. And then you can see prices fall like they did in 2022. Anyway, hope that helps folks that are like, really, what's kind of happening here? And I hope that helped for Williamson County, Texas. All right, what else we got? You mentioned 2 billion Ohio property taxes collected. No, 22 billion. 22 billion, Rebecca, in property taxes in Ohio. Actually, the number I looked at yesterday was like 24. So I think maybe my first number I calculated was wrong at 22, but it's 24. We'll call it 22 to 24 billion in property taxes. 60% of my property taxes are going to the schools. Yeah, I think that's normal. Is there any data? What's up, Ches? Is there any data on people who have listed their house but took it off the market? Could that play into the data? Yeah, so let me show you guys this. This is not from Redfin because I don't have the data from Redfin. This is delisted homes. And you asked about this last week, Ches. So I wanted to bring it up. These are delisted homes. It says delisted homes have been elevated for the past year. This is realtor.com. The link's in the description if you want to go to the article. But delisted homes are up 35% year to date. And what Ches is asking about here is basically people that have put their home on the market, then they take it off the market. Sometimes they relist it, but sometimes they don't. And we're seeing more of that because people are like, oh man, the market's hot, or they think it's hot because their friends tell them it's hot, or they just, whatever, they didn't list it a couple years ago. So now they're like, I got to list my home now to see if I can get, the highest price possible. And a home maybe is listed at, it should be listed at 500 grand. And somebody comes in and says, I'm going to list it at 575. Yet there's no reason to do that. And so then they don't get that price and they take it off the market. They kind of take their toys and go home, right? That's kind of what that phrase is. It also shows that sellers aren't in distress if they're doing that. Otherwise, they would leave it on the market. Don't fool yourself. Don't lie to yourself. Anybody who is in financial distress is not going to overprice their home. And if they need to, they're going to short sell it. They're going to put it on the market for a price underneath what they even owe, and they'll short sell the property if they can't afford to keep it anymore. But this delisted homes shows you kind of what's happening. Let me make it a little bigger here. So the red line are the red line is basically the year-over-year growth or shrinkage of delisted homes. I mean, it's a little too big. So right now it's around the growth, 45% approximately, year-over-year growth of delisted homes. And the number is now about over 80,000 homes. And that's for a month. I think this is for May's info, if I remember right. So this is for May. So there were about 80,000. You could see back in, I don't even know what month that is. Early, let's see, like maybe December, January of 25, there were 120,000 delisted homes that are removed from the market. The listing could have expired, or the seller says, you know what? I'm not getting the price I want. I'm just going to take it off and try again next year. but it's growing. The percentage increase of delisted inventory is growing faster than active inventory, actually. So is that hopefully that helps, Ches, answer your question. But that's what's going on there. It's definitely playing into the market, and it's definitely playing into the data when you look at active inventory, because that hasn't been really impressive over the last couple months. So that's definitely playing into that. Is it playing into new listings? I don't know that it is, because people are just taking it off. Some relist, but not all of them. Why is there no mention of big businesses not paying much on the shoulders, residences, and small business? Why is there no mention of big business? And I'm not sure what that means. Sorry. You have to be more, you have to help me out understand that, because I don't understand that. One. Oh, so okay, you got that one. Oh, in Fairfield County, you notice more homes for sale. That's what I looked at for TH2. Good. You need that. Scooby and Daphne. What's up? Cool dogs. I love dogs. Florida homeowners are delusional, asking 3 times more than it's worth. I'm going to look at Florida a minute. I've got some Florida metros to look at. Let me just tag that one. Portland. Whoops. Portland, Maine. No, Portland, Oregon. Yep, I'll look at that one. If you have the data on more specific areas like Battleground, Washington, or further out, but Oregon side, like in Hood River, Oregon, looking to buy first home. Tell me what county that is. Maybe that'll help. But I'll definitely look at Oregon. Sounds like here. What's up, Burp? Looks like a lot of digital facelifts on the listing. Oh, are you talking about that Fresno one? I don't know. Juan said it was a nice home. But yeah, look, how they do photography for real estate, by the way, maybe you know this, maybe you don't, but they take 3 pictures usually. There's like 3 different pictures taken at different exposure levels. And then they have those blended together by an editor in order to give you the final result. That's why the pictures look so fantastic. And when you take them with your iPhone, they look like trash, because first off, the photographer is usually using like a $5,000 camera, and they're taking like multiple shots and then blending them together, right? That's how they do it. So digital facelifts do happen, although the one that Juan was saying, there was a lot of buyer traffic there and they went way over asking. I'm waiting till the fall. It will plummet as the rules change for assistance. That's true. They do change. You're right. What Candy's talking about is that the forbearance is ending on the mortgages. So right now, people are not paying mortgages if they don't have to. So that could be some of the new listings, right? It could be. But like the people that are in that program right now, it's like 500,000 in the forbearance program. So pretend half of those people hit the market. A couple 100,000 listings would help. I mean, for a little while. But if a lot hit your area, it'd be good. North Country, South Dakota. Oh, yeah, I got to look at that. I've never looked at South Dakota before. A fool and his money are soon parted. Right. Understood. Fresno was one of the last normal places to buy a home in California. Looks like it's just El Centro and Barstow now. Yeah, Barstow. That has the largest thermometer in the world, right? I remember always driving past there. Oh, okay, here's that house talking about. It caught my attention. I would have sacrificed downsize living space. I would have offered asking 438, I guess, right? But not over. And these homes are scarce for the area due to the price and status of inside the home. So they're scarce. That confirms my suspicion that a lot of the inventory in the market is not inventory people are interested in. So it's almost like fake inventory. You want to know what shadow inventory is? That seems like shadow inventory when no one wants the house. But the house you looked at, people obviously want it. Could you check Mansfield, Ohio? Yeah, I can check that. Escondido. Yep, I'll do that. Homes are outdated and poorly renovated, going for $700 to $800K. We're selling ours and looking for a newer home. Oh, good. Well, wish me luck. I'm going to see a home in my same neighborhood where this $438,000 home went into pending in days at 470. I'm trying to offer below. My realtor is going to gate. Probably hate is what you meant. I mean, honestly, like if the home has just been listed, if it's in that same area, and if it's in great condition, the chances of you getting a deal are probably slim, right? They just are. You need to find something that's been on the market a long time, but it sounds like that may be challenging. If I'm you, I look off market and I would drive for dollars. That's what I would do. I would drive the neighborhoods looking for houses that look a little beat up if you're open to we're doing some work. And then I'd send those folks letters and ask them if they want to sell their home. And I would do that over and over again until I got either a leave me alone or I'm ready to talk. And I'd try to find something off market. I would also look at wholesalers. I would look at expired listings of anything. That's a way to do it too. But man, good luck. Let us know next week when we do another live what happened. If schools, that's tax stuff. I'm just going to talk about the housing market for a minute. I came a bit late, but I heard your intro where you're talking about pulled sellings as a sign of seller strength. However, in 2005, pulled sales quadrupled from 40 to 160,000, and then we crashed. Huh, interesting. I'll have to look that up. I did not know that, BR. Yeah, very possible that there were a lot of pulled listings then. I guess I'm talking about more so new listings. The fact that new listings are down year over year, like San Francisco that you're looking at on your screen, down 30%. If there was a bunch of distress in San Fran, it's not going to be down 30%. Okay, not a sign of strength. It's a sign of market weakness. Okay. Yeah, I guess we'll have to see how it plays out, right? Nope, I can do Savannah, Georgia. What's up, Super Tech Boy? Where does one find wholesale listings? Just Google it for your area. That's one way you can do it. Just type in like, let me think for a second. If I was in a new city, I would go to Facebook. I would go to Facebook and I would look for groups in your area, like investor groups and folks that, and actually I would also look up investor meetings, real estate investor meetings in your area. There's most areas will have like a weekly face-to-face meeting. You sometimes can tap in via Zoom or whatever, and they will, there's a lot of wholesalers that go to those. So I would network with real estate investors in your market, and you may be able to find them that way. You could Google them, but Facebook is a great way to do it. If you literally like Google or put into Facebook real estate wholesalers in whatever city, you should probably find some. A warning though, it's not like buying a property on the market. It's not like buying a property from a seller. You're buying a signed contract. You're buying a contract, not the property. You're buying the rights to buy the property, essentially. So you should definitely do a lot of research on the property, and you should research the wholesale process in your area before you jump in. You should use YouTube as your guide there. I would just do as much knowledge work as you can around wholesaling, because it is an opportunity. Naples. Sure. Portland Metro includes Clark County. Okay, I got that one. Let me see. Jason, as an investor, do you purchase auction homes? Do you check for liens with the county auditor? What about HOA back dues? I've never bought an investment property in an HOA. I guess, people do. Do you purchase auction homes? I have a couple times. You got to do a lot of work up front. Got to make sure the home exists. I have a title company will run the title search on the property for me. You could do that. And you can just use the auditor, the treasurer, and the recorder, usually, depending on what state you're in, to do some homework. But yeah, I check with liens. I check all that stuff to find out what's really going on with the property. And they're homes that I had never been in. So I bought them sight unseen. Like I went by the house, but I couldn't go inside. And I expected the worst. So I bid like I had to do a complete gut. And then if it turned out where the home needed less work, well, win for me. But I acted like I had to replace the drywall, the siding. I'm sorry, the drywall, the electric, the plumbing, the kitchen, bathroom, flooring. The worst case scenario. We should do a search in each town and see who owns what. That may be a way to see if there is squeezing and pressure the common folks for tax collecting oblivious. I don't know. I don't know about that one. I kind of understand what you're saying. Okay, I'm going to go to this data now with you guys that you wanted to know. Scooby, you got to this one. Williamson County, Florida is okay. This one, Florida is delusional. Let's look at a Florida metro here. What do I got? I got one around here somewhere. Denver. Let me just do Tampa. Whoops. What's happening, Mr. Redfin? Tampa. New listings in Tampa, Florida. Down 20%. That's shocking. And it's been falling for a while. Like, this isn't a holiday thing. Maybe people in Florida don't sell homes in the summer. I don't know. I mean, they did the other years, but not this year. Look at this. You were up 1.7, but now you're down 19% in new listings year over year. That's crazy. What about homes sold in Tampa? Down 7.4%. 1,000 homes sold and new listings, 1,265. So you added 150 homes? About. Active listings. What do we got? Yeah, look at the active listings start to drop. Active listings are only up 10% year over year in Florida. It's the same story all over the place now. The active listings are starting to drop. New listings are drying up. It's not what I think a lot of people had on their bingo card. Median sale price in Tampa. Well, that's down 3% in Tampa. Okay. Last year you peaked at 395. Now you're at 383. But it's been going up the last several weeks. So it doesn't look like homes or prices are crashing there, but you're down year over year. Okay. Let's do the next one. Let me do Naples, since somebody asked about Naples. Yeah. Let me look at Naples real quick. New listings for Naples, Florida. Jeez. Look at that. Down 27%. Now, every year it goes down. It looks like at this time of year, right? It always trends down. If you look at these other years. But again, I mean, this looks like a 4-year low, period. It could be an all-time low. I mean, we don't have 2020 or 2021 on this graph, but you're down 27% year over year in new listings in Naples. There must be nothing hitting the market. Nothing. Nothing. Look at active listings. Oh my goodness, it's almost under last year, up only 6.83%. It could be a lot of people pulling their homes from the market, although new listings are down a lot. Look at homes sold, down 0.8, so almost 1% down. 174 sold, new listings. Look at that. 141 were added to the market, 141 new listings added in Naples. But homes sold, 174. So you sold more inventory than you put on the market. That is completely the opposite of what I think a lot of people were hoping that would happen this year, right? And expected to happen. I mean, I didn't expect that. Look at median sale price. Flat. It's been coming down since March. 712 in March, 601. So there is a price decline. I'm wondering if, let's look at active listings again. Yeah, so you saw a rise in active listings early in the year and then a decline. I'm wondering if, those homes are purchased, and because there was more on the market then, you're able to get some type of discount. It'll be interesting to see if that discount continues, but inventory is not helping. Inventory, it's almost like a roller coaster, like where that last car kind of gets flung. They say, hey, the fastest car in the roller coaster is the last one because it kind of gets pulled along with everything else. So prices seem to follow it. That's how I always vision it, is that listings, as they increase, prices don't necessarily decrease yet. But then as people start to buy or listings flood the market more, then the prices start to follow it. And they will start to come down if there's enough active inventory out there and there's price discovery of, hey, your home is priced here, I better price mine lower. That's what will drive the prices down. And sales, I think if prices come down, you could see more sales because people will be like, oh, it's time to buy. Anyway, that's Naples, Florida. I hope that helps if you're looking at Naples. Let me go back to who had it. Portland, Oregon. But you told me battleground is Clark County. Okay, let me do that one. Clark County. Am I like delusional here? What's happening? That's Oregon, right? I don't see a Clark County, Oregon. I see a Clark County, Ohio. Let me do this. Let me just do Portland then. Portland, Oregon. What's happening in Portland? It'll be interesting to look at Portland. New listings down 10.6%. No surprise. Same old story, different metro. Fewer new listings, active listings. I mean, you're dang close to going underneath last year. 7,865, up 2.5% in Portland, Oregon. Wouldn't think that. Hey, if you're joining us, by the way, hit the thumbs up. Don't be a freeloader. Hit that thumbs up. That's the only fee that I charge. Home sold. What do we got? Up 0.9%. 643 homes sold, 643. New listings, 710. So you added 60, 70 listings. About median sale price. Ooh. Median sale price, 572,000, up 1% year over year right now. Not bad. I mean, It's not deflation, but it's not like you're up 20% or something. It's not an all-time high. It looks like you hit the all-time high back in 2022. Or no, you hit the all-time high this year at 579 few weeks ago. Homes seem to be very expensive there. They don't seem to be coming down overall. And new listings are not increasing. That's going to spell trouble as you move through the winter, I would think. Yep, that's Portland. Yikes. Let me go back to the live and see if he had anything. Oh, stupid me. Washington, Clark County, Washington. That's why. Come on, Jay. I used to live out there, and I don't even know that. I couldn't remember that. Here, let me do that one too for you. Clark County, Washington. Right. Clark County, Washington. Yeah. That's just north of the border there, right? Not much better. Down 13% in new listings in Clark County, Washington. Homes sold. Down 3%. Nobody buying, nobody selling compared to last year, I guess. Active inventory. Look at that. There's a spot where you're down with active inventory. Down 1.63% year over year. So you have fewer homes right now in Clark County, Washington versus this time last year. I mean, that's befuddling, to say the least. What about median sale price? 565, up 2.4%. It's been coming straight down over the last couple weeks. Homes sold. Let's go back to that real quick. You had an upswing in home sales. Maybe people were like, oh, price discovery, so they're paying less. I'm not sure. Let me look at new listing median price. This is what people are listing the home for. Up 0.38%, about what they were listing them for last year. Let's look at, we can look at weeks of supply and see what's happening. Weeks of supply is how long the number of homes you have on the market right now would last if you didn't add any more. 12 weeks, which is like 3 months. 3 months is considered in many accounts still a seller's market. But it's what type of inventory is out there. That's the question. Again, let me know what you're doing out there. If you're asking for a metro, like, are you buying, selling? I hope that helped. I hope that helped. That's an interesting market to look at. Who's next? Who is next? Savannah, Georgia. Let's do Savannah, Georgia. May not have a lot of activity there, though, in Savannah. Kind of a small area, I imagine. No, it's not that small at all. New listings in Savannah, Georgia, down 2%. Fewer new listings, not as many people putting their home on the market. Again, that's not what you want to see. Look at 2022. We keep going back there, but it's important to understand how this all kind of plays together. You had 253 new listings. That was the 4-year high. Right now, you're at 175 new listings. So it is fewer new listings. I think it just is what it is. Let's look at homes sold. You're actually up 4.5%. That's 156 homes. And new listings was 175. So you're just adding a few homes, basically, that are for inventory, unless people take them off the market, which they definitely are right now. Yeah, and nationally and in every market, we're seeing this where that active line is starting to fall. I don't hear anybody talking about this. Like, I even sent a note to Lance Lambert at Resi Club. And I was like, hey, you should do an article about new listings because I'm seeing them fall. $2,700 active listings, up 34% right now. So there are more homes for sale, which is good. You probably have more inventory out there. Unfortunately, doesn't look like it's growing. It looks like it's shrinking. Been shrinking for the last couple of weeks. Started in May, it started to shrink, right? Let's look at median sale price. So people say, well, what does all this mean? What do I do with this info? Well, it kind of gives you an overview of your area. But if I'm you, I go back to the Redfin data, look at it myself, ask questions, go into ChatGPT, ask questions about anything you're curious about your market when you look at the data. And then I would zone in on where you want to buy and track it even on like Zillow if you have to. Or the best way is to get with a realtor, call some realtors, tell them that you want data, you're not ready to buy yet, unless you are ready to buy, and tell them the data you want. You want new listings, you want active listings, you want homes sold, you want the median sale price is fine to get as well if you want it, and tell them the exact area you want that information for, and tell them you want it on a monthly basis or every 2 weeks or whatever. If your realtor won't provide that to you when you ask, you should find a new realtor. You just should. 11% up year over year in median sale price. 397. Yikes. It's gone straight up. Look at that. People must have decided, hey, I'm going to pay more for homes out there now, or what people are asking. New listing median price, what's that? 389. And the median sale price, 397. So it looks like people are paying over asking there. But it doesn't look like it's crashing, that's for sure. Up 11%. That's crazy. Crazy. Let's go back and see who else. Hopefully that helps you. Super Tech Boy. I did that one. Somebody wanted South Dakota. North Country, South Dakota. Is that the county name? I don't know that county. Oh, there's North Slope. That's not it. I'm grasping at straws here. Metro, let me try that. North. Nope, it's not that either. I need a county. Sorry, I'm going to need a county, Jasmine. I'll come back to you. Mansfield. Yeah, I'll do that. Mansfield, Ohio. I know Mansfield well. New listings of homes for sale in Mansfield, Ohio, down 14%, 15%, whatever. But it's been going up this year. And I wouldn't read too much into the up and downs. Just look at the trend. It's been going up. There's just not a lot of new listings. So you're not going to have a ton of smoothness. It's going to be a up and down, up and down. But it does look like new listings are growing. Active listings are starting to come down, but they have grown this year. 264, you're up 14%. They started at 204. So there are 60 more homes on the market. Not bad. You need more, I would think, to have some a big price change. But nonetheless, in Mansfield, you've got some more active listings to choose from. Let me do homes sold. Look at homes sold, down 17%. So I would think, I know Mansfield pretty well as far as the housing market. It depends on where in Mansfield, but there's probably some opportunity there. Fewer people buying, more active inventory, maybe some sellers that are like, man, I need to sell. So what's days on market look like? median days on market. Yeah, look at this. This is how long a home sits. So you're at 32 days. And that's up 22 days year over year. Wow. So back last year, it was 11 days homes were on the market. Now, 32 days. So something you could do is look at, Barry, what you could do is look at homes that have been sitting longer than 30 days. Like if a home's been on the market 45 days, you're like, well, the median time on market's 32 days, and that one's 45 days. Maybe there's an opportunity there. Or maybe an expired listing, right? Homes that were pulled off the market because they expired. They couldn't sell them. Probably have to do some work to them. A lot of old homes in Mansfield. But it could be a way to build some equity and get a deal versus paying retail price. Just going to take some sweat equity. What about median sale price? I mean, median sale price down 2%. I can't believe $202,000 for Mansfield. That's nuts. Which sounds cheap when you look at other markets where they're like 500. But for Ohio and Mansfield, if you guys had ever been to Mansfield, you'd know $200,000 seems egregious, but that's where we are in the market. I mean, years ago, going back in time, 2021, at the end of 2021, it was 140 grand. Now 202. Nuts. Doesn't look like it's crashing, but you do have more inventory. Unfortunately, new listings stink. And I always look at deals in Mansfield. I own a couple rentals there. I always look at opportunities there. But and I am seeing more, but I haven't seen anything where I'm like, well, that's a great deal, or wow, that's intriguing. I don't know. Tell me what you're seeing though. Hopefully that helped. Barry, what else we got? I'm sure there are more. Let me go back to the comments here. Riverside, Agent Crypto. What's up? Yeah, let me do Riverside. I think I have that one loaded. Yep, I got that one loaded right here. Oh, Redfin, what are you doing to me? Sometimes it resets like this. I can't figure out why. I don't know what I do, but it's like a Tableau plugin they use, I think. New listings in Riverside. I was looking at this morning, down 13.9%. This is county, Riverside County. Down 13.9% in new listings. Crazy. Pending sales, down 7%. What about homes sold? I'm starting to use homes sold more because it's actually sales, not pending sales. Down 3%. That people aren't buying, not selling. But let's see, you sold 491 new listings. You listed 541. Difference 40 units or so, right? Is that right? 40, 50 units of homes. But again, go back to 2022. We've done this. I mean, we'll keep doing it over and over again. New listings back then, 975. Well, that's not right. 947. Now 541. There's a big difference just from a few years ago. It just is what it is. It's very strange, right? I mean, you had more people rushing to put their homes on the market in 2022. It's almost like we had a crash, right? Prices came down nationally. It was the fastest price decline I think we've ever had. I know this because I was actually listening to Real Estate Mindset while I was rehabbing and putting flooring or trim into a rental property I own. For some weird reason, I decided to do the work myself on that one. And I wasn't on YouTube then, really. So I was listening to Travis at Real Estate Mindset, and he was talking about these price declines that were happening. And then boom, that trend reversed. He was talking about them in 2022. Maybe that was our crash. I mean, prices did fall a lot, but since then, they've kind of stabilized in many areas. Actives. What's active listings? Look at that. Wow. Up 7%. A bunch of people must have pulled their home from the market all at one time. I can only assume that, right? 9,400 homes, now 8,193 homes. Geez, that's a rug pull. Median sale price. Flat, down like a fraction of a percentage, though. Doesn't really matter. $615,000. It's gone sideways. Started at 606, now 615. Last year, you started at 578. In 2023, you started at 562. In 2022, I'm sorry, 2023, that's right. You started at 548. And in 2022, you started at 562. No, that's a rate of change. My bad, guys. 548 in 2023. And in 2022 started at 562. And then 2024, you started at 578. And this year, you started at 606. So homes are much more expensive, obviously, since then. Doesn't look like a price crash there either. I mean, let's go back to actives real quick. Yeah, I mean, look at this active listing chart. It's nutty. But you're headed straight down. Must be a bunch of people pulled their house from the market. Only thing I can assume. I don't live there. All right, what else we got? 48. Let's see. Loving Two Limes. Would love to hear your story on how you got started in real estate investing. Did you have outside backing on the investing side? Also, how is business? I'll star this and come back to the end. I'll come back at the end if you're okay with that. Loving Two Limes, so I can keep helping people with their housing markets. But yeah, I'll tell you briefly how it happened. What does a dull gut? A dull gut. I thought I was saying goat. Dull gut costs roughly on a 1,500 square foot house, Jason. A dull gut. Or full gut's probably what you meant. Yeah, full. On a 1,500 square foot home. I was quoted that fairly recently, like with a basement, with a full basement that was drywalled. $9,000. That's what I was quoted. I was quoted 11,000 on a flip I did last year, and I decided to do the gut job myself. Big mistake. That was the worst 3 weeks of rehab work I've ever done. Gutting a home, depending on what type of home it is not fun. If it's like a plaster home, that's incredibly difficult and dirty and nasty. You got to wear like a full suit, like Tyvek suit with a respirator, and they're hot, right? They're not breathable at all. Like the mask is incredibly hot, but you need that because the stuff that you're tearing out of the house is like fine particles. Like drywall dust is incredibly fine. So that's the last time I do a gut job, like a full gut down to the studs. And it's monotonous work because you got to rip the drywall off, and then there's drywall nails there that you have to take out of the wood. Because the drywall guys aren't going to, that's not what they do. And sometimes you have to have a framer come in and actually fur the framing. But about $9,000 is what I was just quoted on. It's a little small. It was like a 1,400 square foot house, ranch, basement, full basement that was drywalled. It was $9,000. And that's to tear out everything down to the studs, and including the old electrical and the old plumbing, and dispose of it all. Florida sales are down right now. Yeah, I would assume they are. I assume if you buy at auction, you're responsible for paying off liens, unpaid taxes, and unpaid HOA fees as well. Yes, you are. Usually you are. Check the fine print. I know somebody who bought a house at an auction, did not take the time to check that stuff, got cheap. Don't be cheap with this. Pay a title company. If a title company is going to charge you $80 or whatever to run a search on a house, a title search, pay it. If you run all the numbers and you're like, hey, if there are no liens on this house, these numbers work. I want to go after this auction. The last step could be I'm going to pay $100 or whatever to get the title work done, so I understand what's happening with the house. Don't skip that step. I know somebody who skipped it. Once they moved in, they figured out, or once they bought it and closed, they figured out, oh, there's 20 grand in liens on the property that they didn't see. So that's a big mistake you can make. Also, drive by the house. Even if you can't go inside, drive by the house. I know there are people out there who have bid on auction properties where they're just vacant lots because the house burned to the ground. But at one point, Google Earth showed a house there. So they're like, oh, the house is there. I'll just be lazy. Drive by it. More people take a chance to purchase in Florida in early spring, way before storm season. Interesting. Yeah. Hey, how are you doing, ML? Could you please look at Christian County, Missouri? Sure. Yeah, I'll tag that one. Christian County, Missouri. Stand by. New listings in Christian County, Missouri. Up 6.5%. So you got some more homes hitting the market than last year. That's good. Active listings. How many homes are on the market? 7.21% more. So you do have a few homes compared to last year, a few more homes compared to last year, but not probably a ton. Like 361 and 387. Yeah, 20 homes or so. 26 homes, whatever. Not much. But at least it's not down. You can be thankful for that at least. Median sale price. Whoops. Oh, I'm sorry. Home sold. Up 25%. So you took away 36 homes. In new listings, you added 44. So you added a few more active listings. I mean, this is probably a good time to look at this. If you are one of the other factors to watch in the housing market, and again, you can't do anything about this. You can't do anything about the inventory, or you can't really do anything about any of this except how you move forward with your action. If interest rates fall too much, what's that number? The magic number? I don't know. Is it in the fives? Would a 5.98% versus a 6.5%? Would that make people run back into the housing market? Maybe. If that happens and we get rates lower, that's not going to be good for inventory. Because like in an area like this, in this little county in Missouri that you may have never heard of, you had 36 homes sold. On the new listing side, you only had 44 hit the market. So you're like this close to having sales outpace new listings. That would shrink inventory and put you into that situation we were in during 21 and 2023, where there's no inventory and prices just went straight up. That would not be good for the housing market. The problem is the current administration, or really any administration for that matter, does not seem to care about affordable housing. Maybe they know they can't do much about it. I have no idea if they can or can't, but they just don't talk about it. They talk about lower rates. To them, that's what affordability is. If you were to ask them and the people in charge, what does affordable mean to you? They would say lower rates. So people's payments are lower. They're not saying we need to get the price of homes lower. I'm not, despite what you want, that's not what they say. And so they want lower rates. Lower rates is not going to help this situation in Christian County, Missouri, or wherever you are. Lower rates aren't going to help. They're going to make things worse. Unless you're ready to buy and you're okay with the price, a lower rate is better than a higher rate. Or you got to refi. Then lower rates help. Median sale price. What's up with that? This is all over the place. Not a lot of transactions. So it's going to be up and down. 339 grand up 2%. Up 2%. Again, no crash there really because it started at 334, now 339. So you're up 5 grand. Year to date. But it's shocking how prices are just holding firm. Okay, let's go back to comments. Is that where you live, ML? Christian County, Missouri. And thanks for spelling my name right. A lot of people miss that. Did Redfin start collecting data in 2022? No, they have it going back on the weekly data, I think, to like 26. No, that's not right. Oh, on the weekly data, I think it was 2019, if I'm right. I think but the problem is they only put 4 years of data in these charts. That's the problem. But it's the most up-to-date information because it's weekly. That's why I use it. I could do a monthly thing. It's up. They have monthly data that goes back to 2016, maybe even 2012. But that's monthly data, not weekly. But you can go into their data center. I'm not going to exactly do it for you, but you can go into the data center down here and you can actually download the data, the raw data, if you wanted to, and then put it into Excel or put it into ChatGPT and, slice and dice it. That's getting really nerdy. Don't tempt me, super tech boy. What's up, Kelly? Hello, housing nerds. How you doing? Hit that like button for our host, please. Yeah. I appreciate it. Is it common for a neighborhood to have 20% of their houses for sale? I don't know. It depends on how big the neighborhood is. If it had like 5 homes and 1 home was listed, yeah, that's maybe common. That's a great question. I don't know. It probably depends on what type of neighborhood, where it is, how many homes are in the neighborhood. Yeah. It could be, or it could be a lot. Been looking at the houses for sale in Middle Tennessee. Too low quality, too small, and cost too much. Looking into building my own barn dominium at this point. I know people have done that. They turn out really cool. Hey, good for you. Right now, building could make more sense. It could. I'm helping somebody buy a home right now, an expensive home, and they've looked at, a handful of homes and can't get anything that they're like, yeah, this is worth the price that I'm willing to pay. And now they're like, I'm just going to build. I can't argue with that. Even if you pay more maybe for the house when you build, I'm not talking like a new build, like you go into a subdivision and buy like a new build. I'm talking to what Kyle's saying, where he's building a barn dominium somewhere. And if you go out into the country and you're willing to drive into wherever the metro is, if you have to make that trip, maybe it makes sense to buy a piece of land and build something, even if it costs you more up front because you're getting exactly what you want. Maybe it costs you 10% more, but you're like, hey, I get the house that I want, rather than, lamenting about your purchase. So I can't argue with that. If you can't find anything, like Kyle's saying, too low quality, too small, cost too much, gonna build. Warren County, Ohio. I just looked at this yesterday. In Warren County. New listings in Warren County. up 7.1. Good. Actives. Look at this. Up 27%. So definitely more homes for sale. More new listings, more homes for sale. What's up with homes sold? Up 15%. So you sold 73, you added 90, so you left a few on the market. What about median sale price? Man, this is what I was looking at yesterday. Look at this. 453. And Warren County, isn't that just north of Cincinnati, like Lebanon and Mason? I think that's where it is. 453, up 12% year over year. It's an all-time high by far. Like, I mean, just look at the chart. Look at this gap here. Look at the gap there. Prices there are completely unhinged. But you do have a lot more active inventory, or you do have more active inventory, and you have more new listings. But people are buying homes because you're up 15% in homes sold. Ohio's just not, prices are not coming down. I'm going to do an all Ohio live in the next couple days. Not exactly sure when, depends on how my schedule goes, but tune in for that, Chuck, because that's, yeah, prices there are crazy. Okay. Let me see. It's 12:07. I've got to give it a couple more minutes, and then I got a jet. Let me look at these comments. Oh, here's a good question. How does one look at a house with land? Does the price per square foot go higher or lower comparable to other comps? That's a great question. You need to look at other houses with land. That's how you have to compare that. Like, you can't, it's very hard to compare a house, a like for like house, if one has like 5 acres and one has like a quarter of an acre. You need to look at other houses with land. That's one way to do it. That is probably how you should do it. And it really depends on land, what type of land it is. Like, is it like rolling hills that are usable, or is it like wooded hillside that you'd have to clear and cost a fortune to do that? Those are and some of the things I would examine. You need to look at like for like comparables, and in the country that's not easy a lot of times. Country rural comps are some of the hardest to do. Subdivision comps are the easiest to do. Like anybody can do that. You know, it's just like the house down the street, same model as mine, looks the same. That one sold for this price, mine will sell for near that price probably. But if it's in the woods or if it's out in the country, sometimes it's very hard. And you should, if you need help with that, I would work with a realtor who knows rural property and is, understands the country living. Probably also depends if they're on city water or septic, how old the house is, if the land, also if like the land has CAUV credits or is farmable, or you can get like hay off of the land. All that stuff it kind of comes into play. So you really have to compare a like for like property as much as possible. And in rural areas, you can go out further than like a quarter of a mile because there's probably nothing there. You may have to go out 5 miles, 10 miles, and try to stick to the same school system if you can. Great question. Lowering interest rates just increases sales prices. I agree with that. I agree there. I think it will. It may not make them go parabolic again. It depends on how low they get. And what the rest of the economy does, right? True, you know what I mean? But overall, I don't think it's going to be good for prices. I think a lot of people that are pretending, but they're lying to themselves. They're pretending that, hey, prices are going to come down if interest rates come up. I mean, again, there's that whipsaw thing. So it's like, prices kind of follow it. So for a while, we may see prices soften nationally if inventory continues to rise, even if it's at a small rate. But then if prices come or interest rates come down, then eventually you may see that come back up quickly. Okay, so there was a question here because I have to go. Love in two lines. What your story about how you got in real estate investing? So yeah, not that fancy of a story. Basically, I was in corporate America for 20 years, whatever, a long time. I was just in a normal job, salesman, just a sales guy, account manager. I was in the construction business or construction industry, and I stopped working that job and got into really didn't know what I was going to do. I just needed a change of pace. And so then I think 5 years before that, and this was in 2017. So like maybe in the early, like 2010, 11, 12, I started thinking like, real estate investing may be something I want to do. I didn't know anything about real estate really. Bought a home, sold a home, but beyond that, I didn't know anything. So I was like, all right, well, it's time, maybe I'll look at being a real estate investor. Maybe I'll be a flipper and buy some rentals. And so I just went out. I got together with a couple friends. We formed a company, and I went out and we started looking at properties, bought a few of them, started doing some flips. That partnership didn't work out, which was probably for the best. And then my wife and I just kind of started doing our own thing outside of a partnership with other folks beyond my wife and I. And I have been doing that ever since. And then I got licensed as a realtor because I needed cash. I needed to make a living. I quickly found out how expensive rehabs can be. So I didn't have any. You asked if I had any backing on the investing side. Not really. I had some savings, right, for some seed money, but I quickly found out that that's going to vanish, immediately on flips and rentals if you don't know what you're doing. And I didn't. So learned some hard lessons there, had some wins, had some losses, and slowly over the years, learned more and more. I bought the majority of my properties right when COVID started. That's when I bought the majority of my rentals. I bought a lot of them all at once, basically. And sometimes that's a curse because there's a lot of deferred maintenance to take care of. But now I'm thankful that I did, given where prices have gone. And then you asked me, how is business? Business is good. It's good as a realtor. It's good as an investor from a buy and hold end, if you find the right deal, obviously. But as a realtor, it's going well. Like I can't complain. I have clients, buyers and sellers I'm working with. But it's just me. Like I don't have a big office. This is my office, a screened-in porch. So I don't have a lot of overhead. And so it allows me to really focus on the clients and take the time with them. But yeah, that's how I got started. I really was like, oh, real estate seems to be something I'd want to do. Let me kind of poke around the edges. I watched a ton of YouTube. I listened to a ton of podcasts for 60 days straight. Every day I listened, 8, 10 hours a day to really understand whatever I could about real estate investing. And I honed in on one specific asset, which was small multifamily. So I stay away from single family for the most part. I like duplex, triplex, and quads. That's my thing. So I focused on that one asset class. And then I followed what Mike Zuber does at one rental at a time, which is a buy box. Every day I look at the buy box, look at the available inventory, look at what fits the buy box. If something makes sense, I make a low offer. So that's how I did it. And I keep doing that. I will tell you, I'm not finding a lot of deals right now. Like one a year now versus, 20. Things with interest rates the way they are and sellers stingy and prices high, it's very difficult. So that's the story. So it's been like 8 years now that I've been actually investing and being a realtor. Hope that helped. But thanks for asking. All right. That's that. Any other questions or comments? Oh, you know what? One of y'all wanted to see Escondido. I don't think I looked at this. So let me do Escondido real quick before I go. Escondido, California. There's not Escondido, County, Jason. I'm gonna have to do San Diego because I don't think I have Escondido. Do I have San Diego pulled up? San Diego. Nah. San Diego. All right. San Diego, California. Unfortunately, I don't have Escondido. Too small of a metro for Redfin to pay attention to it. But get with a realtor there because that's where you're going to get the best data from the MLS. I don't have access to the MLS out there, obviously. But new listings down 6.4%. That's crazy that new listings are down like that in San Diego. Homes sold down 9.2%. So they sold 444. They added 608. Okay. 150 homes about were added to the market. Active listings. Well, that's going straight down right now. Maybe people delisted their homes all of a sudden like they did in, what was that, Riverside? Down 15, oh, I'm sorry, up 15% in active listings. Median sale price down 1.7%, 2%, 915 grand at $915,000. 2% is nothing, right? That's what I'm saying. Like, I hope you can see that new listings are where it's at. That drives inventory or helps drive inventory, but it's a big indicator of distress. And these prices, like if they fall a couple percentage points, that's not going to make a hill of beans difference usually. Like you really need them to drop, people want them to drop 30, 40, 50%. Imagine the amount of inventory you need to see that type of drop. Tons of inventory, like buckets, like scoopable inventory, stuff falling out of the sky, houses listed everywhere, complete distress. Like in Columbus during the GFC, we only saw a decrease of 13% in home values through the whole great financial crisis. The worst years, combine them, 13%. Not that much of a drop. Pittsburgh, Pennsylvania went up, I think 5% during the GFC. So I think there's a, whatever you want to call it, old wives' tale, a myth that like every market during the GFC dropped 50% and we could easily get there again. We could, but does it look like we are right now? Watch the live again and tell me what you think. Anyway, look, you guys have been tremendous as always. Thank you for the interaction. You got 56 people on. Hit the like button. Subscribe to the Housing Nerd. Check me out on the Ohio Housing Nerd, where I just cover Ohio. Lots going on there with taxes. So make it a great day. Make it a great weekend. Thanks so much. I'm the Housing Nerd, and I am out. OUT out.